Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Monday. Happy Monday, everybody. Hope you guys had a great weekend. It's October 21st here today. Light week news week this week. We don't got a whole lot in economic data to be reporting this week. Today happened to be one where we have nothing. Tomorrow we'll get the existing home sales, and then later in the week we'll get new home sales data coming in. However, we do have some headline news, so we'll kind of jump into that. Today's stocks are a bit mixed. The Dow seems to be kind of going back and forth in terms of positive, negative territory. Uh, we are starting the next phase in terms of the phase one, basically, of the China trade agreement. So it sounds like they got some parts of it are working. They're working their way through it, but at least they got phase one worked. Sounds like they got the. Sounds like they have worked their way through a phase one now. So they're working on that as they progress towards completion of this new trade agreement. I don't think they've got the full agreement done, but at least maybe a partial agreement. So that sounds like that's what's going to be kind of being what's being applied. Hopefully later we'll get a full agreement completed here. There's also sounds like a request for another Brexit extension. It sounds like they're not on the same page in terms of the politics in the UK on how to separate themselves from the EU. So it was basically Boris Johnson, the Prime Minister, was forced his hand to go ahead and go to the EU and request for an extension for another 3 months. So we're waiting to hear if that's going to be allotted to them. Also, we're getting some decent Q3 corporate earnings so far today. Well, not today, but what we've been seeing so far. We're getting obviously more. We're still in the middle of this, but so far the Q3 corporate earnings have been here in the U.S. been pretty positive. So that's a good sign here for the stock market. So let's jump ahead here, see how the bond market is playing out, and it's not looking as rosy for the bond market. The bond market is now down about 9 basis points. We've been seeing this kind of decline here. We're trying to fight its way back above it. We broke below it, 100-day moving average, and now we're trying to fight our way back above it. Because if we stay below it, and this is stays down below it, we got another 50 basis points, which translates to probably about another 0.25% in rates in terms of what it could rise up towards. So if we could break above it and keep this as our floor of support, it could give us that spring where we can get back up to this way. Even though we got a double layer of support or a ceiling above us with the 25 and 50-day moving average here. So again, and then of course the stochastics indicating that it's getting into a overbought position, and hopefully that will create a trend reversal like we saw back in middle of September, and work its way back upwards. On the other hand, we got the other flip of that. So we got the yields trying to fight above its Fibonacci level here, and before it starts reaching the 100-day moving average. And right now it's sitting at about 1.78, and it's going into an overbought position here, level here, once it goes above this green line here in the stochastics. So hopefully we'll start seeing some improvements here, but right now just we're being a bit cautious so that way we don't see a big jump here, not in rates. All right, so I would say right now there's no change in terms of pricing for interest rates, but something we will definitely keep our eyes on because it could, if that stays below the 100-day moving average of mortgage-backed securities, so we indicate again that we could see further decline there. All right, so that's pretty much a wrap. If you guys are looking to buy or refinance in California, I'd love to hear from you guys. I am a loan officer. Hopefully you guys could help me to support my business to help keep creating these videos for you guys, and give you guys updates on what's driving the interest rates and where we're going with those and seeing the trends, what we're looking for here. But we do offer a lot of wide programs. We can give you a lot of great solutions. Not everybody, a 30-year fix is great for everybody. There's certain programs that might be useful for people, for you as well. So just go ahead and direct message or email me. Email is the best, and I'd love to talk to you a little bit about your scenario. You guys have a great rest of your day. Thanks so much for watching. We'll catch you guys tomorrow. Bye-bye.